Hey, what's going on, guys? I'm just doing a global macro update, and I was thinking today, I thought it was really interesting. I went back and I looked at when we made these couple of big calls that we had this year on long dollar, and then short growth or growth slowing, being short U.S. stocks, being long treasuries, being long the dollar, everything I'm going to kind of walk through here in a second just to do an update on. But I thought it was very interesting today was the first day that we've seen CNBC actually get that right as far as why stocks were down and why the US market. But really, don't forget Europe and China has been getting crushed for 12 to 18 months. And the US market finally is down, obviously, the last 2 months in a significant way, but it's because growth is slowing. And so today was the first time we saw those headlines that the real reason why stocks are down and not tariff this or Trump this. Um, and so that says a lot. And what I thought was interesting, I went back and take a look at what our call has been. And our call has been actually I made this video called I'm terrible at clicking this crap. Um, I'm really terrible. Our call was I did that video on the global macro market shift here. Maybe I still have it up. On August 2nd, I talked about our first call was actually the beginning of the year, 2018. We talked about the dollar is going to break out in a new bull market. We made that call back in 2014. If you can see right here when we broke this wedge, we went on a huge run. Then we had a bunch of good trading moves, but we pulled back here to pi. I know it's really hard to see. And that was our call when we held pi and we broke out. We've been making the long dollar call so since the beginning of the year. And that's something that, again, consensus is only now starting to talk about. We say we want to be long the dollar, be long treasuries. If you guys go back and look at this video I did, this is August 2nd, and I was talking about Apple was at 205 to 208 and how it was pressing into the 220s and 230s, and we were talking about this market's really toppy. That we thought that all these companies hitting $1 trillion was probably a very high probability that that was the top of the cycle. And it doesn't mean it has to be the top of the cycle and then we roll over into a recession or depression. All we're trying to do is catch the point where the numbers go from great to good. And it's not about good or bad. Are things accelerating or decelerating? And that's exactly what happened. We talked about this in this video. If you guys want to go back and look at it. But it's a great call we've had. So today we got paid on it once again. I mean, these were the calls that we've been making on Apple. We've sold around the top of this beautifully. We've been basically short in and out of here, buying. The first time we started getting long was actually this week, and maybe the end of the week before. There's a pie line down around this weekly bands. But the point is that's the kind of poor performance, terrible performance, market crash that tech has had, high beta has had. You look at what technology's done. I mean, this is in the news every day now. But I think what's important is look what the bond market's done. We've had this call all year, but really specifically since the summer. And we talked about, hey, we need to be core long. And the last 2 days, you got absolutely paid on it. So I still like being core long. We talked about, I still think you can go to 250 on the 10-year. These highs from August, we broke above the bands last week. We talked about it was a breakout. Now, everybody, the entire world, we've been talking about the futures and options positions, a massive short in the rates market. It wouldn't take much if growth slowed to just a complete unwind, and that's exactly what you're seeing the last 2 days. You're seeing the yield curve all over the news, and that's fine. There's definitely a lot of curve trades going on here with parts of the curve inverting, but there's a huge amount of big position money, fast money, big picture, real money, pension fund money, the big funds like Unlock and stuff that are probably having reversed their positions here. You can't argue with the charts. You can't argue with coming back through 305 and then so this has been a great call. I think you want to continue to buy bonds. We've gotten really, yesterday was unbelievable. I thought just filling this gap was a big move. So great call there. Everybody that's been long 30s, we'll continue to trade that around. But we like a core in long bonds. We've liked the dollar longs again since pi here, going back to April. Really, it's just been a steady grind higher. You can even look at the euro going back here. All right, this is the beginning of January from 123. There's no reason why the euro still can't go back to 106, 108. It's not going to go in a straight line, but when growth slows, inflation is going to keep collapsing, the expectations and the actual numbers that get reported, because look at what's happened with the oil chart and commodities overall. So you've got deflation basically at this point, and now you have growth really slowing. We still think that January, February, you can see some really bad GDP prints. We've peaked in terms of profit cycle, corporate cycle, and most likely earnings cycle. So I expect to see a lot of misses. And the market finally, again, CNBC got it right today that's the market is down on growth fears. We could pump up the market for one day or over a weekend. But man, when it wants to go down, you get to really see it go no bid. But this is just one thing I wanted to highlight in a teaching moment. I've been trying to point this out on social. But this cycle, it's a simple discovery that I made following some of like Martin Armstrong's work, what he's done with the global business cycle. But this 8.6 frequency is a derivative of pi. You take pi 3.14 out the digits, and that's the perfect cycle, but a derivative of that happens to be 8.6. And I talk about that in our training we do on our model. It's the origins of our model when it comes to time. We believe you don't just trade with trend and price, but you need to get this concept of time down, which is the fourth dimension, and everything cycles. And so it just is what it is, and markets do the same thing. But just on simply counting on an 8-day 8.6 frequency, we've made a highs here, you double topped here. We had 8-day drop into the lows. All right, then we repeated another 8 to 9 point. It's 8.6, right? So you round up to 9. Repeated another cycle 9 count into a low. Here is 1. 8 days up, high. 8 days down, about midway through this range. All right. 8 days down, we had a 9th day drop into the low. That was the low close. And then, I mean, just beautiful. Yesterday was the 8 count, right into a topping tail, right into the resistance. So there's a complete rhythm, guys, to markets and to cycles. So you can notice here we just broke the daily cycle. I still think should be, when you have this big of a down day, you have that much red, you have that much bearishness, right? Those types of days aren't typically followed by a rip back all the way back. It's going to be so hard for the bulls to get all the way back to this high. So any type of rally back up this tomorrow, the next day, the rest of the week is a shorting opportunity. But we should expect the probability is more follow through with time, okay, into the bottom of this cycle again. And maybe even a new low, maybe not, maybe a range trade. But the point is, this was just the start of the turn. And my traders know this was a sell setup in our model, taking out today's low. We were selling this morning, and we had a big day. So I put some results on social. I mean, I did $7,000 in just one futures account this morning. But we hit it again, covered some into the low, sold it again, covered pretty well here. We have SPY puts. This is pretty. We've been making these calls on how we want to be positioned for a while. So it was a good day. If you guys are new following us, I we have a trading floor here that's free to join this chat room. And then we have paid teams here, which is for all these teams, this is $99 a month. I put in all our real-time alerts. So I'm posting every trade that I'm doing and that our model's spitting out, from volatility, S&Ps, the VIX, the Dow, Apple, all global macro, but then just kind of wherever we see opportunity, bonds. I mean, we've been all over the long bond for months. And this is a new topics channel. Crypto, commodities, Forex. So that comes in to you via the River app. It's nice. You can just set it up on your phone to get notifications. Again, this trading floor is free. And then I also have a live trading room that I do every day. It's $200 a month, but we're in here trading Forex together. We're trading any market together. We're trading futures together. That's every day now, guys. It's a new service. It's only a $200 a month. So if you go to jenkinsrm.com, and this is a little bit about our trading model, our process. Okay, and then under trading services, this is the best way to get involved with us. So the real-time alerts, $99 a month for the cost of cable. I'm putting in 12 to 2 dozen trades daily, really. So even if you have a small account, I mean, a couple of trades pays for that for the month. But that's all based around the model. That doesn't exist anywhere for that price, and all to your phone. You can set it up. And then the live trading room, this is kind of our other membership way to be involved with us. We're together. You get to see me trade real time. We discuss the markets, what's happening, where we see entries, and we'll have sessions there for London. We'll get in there for the close occasionally, but it's always every morning. And when I see stuff going on, we hop in there. And then as far as coaching and teaching, I have a trading course. It's based on 10 years of me trading institutional cash treasuries, covering all the primary dealers, large hedge funds. But I was a rates trader. We did 63 to 80 billion a year on our desk. I ran a couple of rates desks, had junior guys. But we traded real size, took real risk. And so we were all about direction. We're not trading relative value or just trying to trade customer flow. We're actually doing our analysis based on direction. And then so we have an options course. I teach the model and options for $500 more, and I teach you some spreads and ratio back spreads that we like. And then this is really the best value, but it's probably for an individual that is a little bit more serious. And this is my tight mentorship group. Not only do you get the live trading room for 6 months, but I get to walk and work with you individually for 8 sessions, 2-hour sessions for 2 months. And it's all about trying to figure out what you're doing right as a trader and what you need help with. So I can't just tell you what to do. You're going to have to kind of go inside yourself and figure out what you're doing right and what you're doing wrong. And the only way to figure that out, guys, is you need a coach. If you already knew all the answers why you keep screwing up, or you can't get your account positive, or why you've blown up several accounts, or why you can't get consistent, you need someone outside yourself to ask you the right questions. Say, hey, have you thought about this? Or let me show me what you're doing. Okay, I see what you're doing. All right, have you thought about this? Maybe why are we doing this? Why are you doing that? Why do you keep selling into the lows? Why are we not trailing this out? Okay, you're doing this good, but you're consistently not letting the market take you out. That's a problem. Okay, let's fix that. How do we fix it? So that's what a good coach does. I've trained hundreds and hundreds of traders worldwide. I've trained guys that didn't know anything about the bond market, doing 6 figures now, all on their own. So it's one of my passions, and we're going to start a new group here next week. So you guys need to probably jump in there if that's something you're interested in. And the best way to get involved with us, just come into the chat room. It's free to come in. Okay, and then that'll throw you right in here, trading floor. And then you can always email me, find my email on the website. If this is a new site, so if something's not clicking clicking through. I think I had one of the links that expired after 30 days. I don't know. I'm not the greatest on that stuff. But just get a hold of me. We'll get you in the room. I can get you in the real-time alerts. I can get you in the live trading room. I can get you in the coaching program. I can get you the model, which is on demand. You can learn that in the evenings if you want. I have a Forex course I've already done. That I'm going to actually, I'm putting it together and formatting right now. And then I'd like to do a futures course. So trying to teach the best we can, but obviously we're trying to do a lot of trading too. So anyway, guys, we've had a good call. I hope a lot of you guys had a big day. Proud of you. We'll just stay in there, keep grinding on this stuff, and I'm glad you guys got paid for sticking to the game plan in the process. So I'll talk to you guys in the morning.